Hi traders, if you've ever wondered why price moves the way it does, the answer lies in supply and demand. Mastering this concept can give you a serious edge in trading. And in this video, I'm just gonna be breaking down the concept called supply and demand. Okay, so from basics to advanced strategies, just briefly. So stick around, take notes, and by the end, you'll know exactly how to use supply and demand to improve your trades. All right. Now let us get started. Before we dive in, make sure to smash that like button and subscribe for more trading content. Okay. Let us start with the basics. What is supply and demand trading? In simple terms, supply and demand are the forces that drive price movements in any market. Okay, when there is high demand for an asset um, and low supply, the price rises, right? Then when there is more supply than demand, the price falls, right? So this is how markets work. Whether you are trading Forex, stocks, or crypto. But in trading, we don't just guess where supply and demand exist. Okay, we analyze charts to find specific supply and demand zones. Yeah. And there are price areas where big institutions and smart money are making their moves. These zones give us high probability trade setups where price is most likely to react. Okay, so now how do we find supply and demand zones on a chart? Here's what you need to look for. Okay, you have to look for supply zones which are resistance zones. Okay, supply zones are areas of resistance. All right, look for supply zones which are of resistance, those are supply zones. Okay, so these are areas where price has risen significantly but then dropped sharply. Okay, this tells us that sellers overwhelmed buyers at these levels, creating a resistance zone. Okay, on the other hand, demand zones, which are support zones, there are areas where price has dropped significantly. All right, areas where prices dropped significantly but then bounced back up, right? Those are supply zones. Price dropped significantly and then bounced back up. This means that buyers stepped in aggressively. Buyers stepped in aggressively. All right, it means that buyers stepped in aggressively, creating a strong support zone. So a simple way to spot these zones is to look for strong moves away from a price level. The stronger the move, the more significant the supply or demand zone. All right. Now that we know how to identify these zones, let us talk about how to actually trade them. Okay. Now for your entry strategy, you wait for price to return to a supply or demand zone. As you will notice, I extended this particular zone because if price should come back to this level again, there is a chance that we might see a rejection. So when you identify a supply or a demand zone, just extend the level, especially if the zone is still, a recent zone, right? Because there's a possibility of price coming back to retest that zone and getting rejected. So for your entry signal, for example, let's just use this as an example now. we can see that we actually had a supply zone around here. Now you will notice that after price got rejected here the first time within this zone, because there is a possibility that if we had to backtest this now, we might actually see rejections in the past. But let's just work with what we have here. Now, after price got rejected, it came back and retested that level. And guess what? It got rejected again, right? So for your entry strategy, once price gets back to a zone, a supply or demand zone, just look for confirmation. Okay, try and get a confirmation that that zone is going to get rejected. For example, this is a supply zone. We'll be looking for bearish patterns around the supply zone. Okay, so ensure you get your confirmation before entering a trade. It could be a rejection candle, it could be a double top, a double bottom. You can see here we actually had a double top. It could be a double top, it could be a double bottom, but the double bottom is going to be for a buy, right? Double bottom is going to be for a, for a demand zone. All right, this one is a double top for a supply zone. Okay, so make sure you just get a confirmation, all right, before entering your trade. Then for your stop loss placement, a good rule of thumb is to place your stop loss slightly beyond the supply or demand zone. Okay, that is to avoid getting stopped out by minor price fluctuation. So if you're going to enter a sell after you got this confirmation, you would have set your stop loss above this supply zone, above it. Okay, some pips above it, not just immediately above, but some pips above it. All right, then for your take profit target, you can actually aim for a key, the next key zone, maybe the next resistance zone, sorry, the next support zone. That is for your take profits for for your sell trade. All right, you can actually target the next support zone, or you can aim for a risk to reward ratio of 1:2. You can see here we're having 1:2.5. This is about your risk. This is about times 2.5 of what you are risking. Okay, just ensure you have a good risk to reward ratio. Okay, minimum of 1:2 to ensure smart trade management. Okay, then by combining supply and demand zones with price action confirmation, you can take high probability trades with confidence. Okay, now let's just take things up a notch. Here are some advanced techniques to refine your supply and demand trading strategy. First of all, refining zones. Not all zones are equal. Okay, so focus on zones with a strong breakout and minimal price retest to find the most reliable ones. One of the things with multiple retests is that once a level has been retested multiple times, you can't tell when, if the next retest is going to lead to a breakout. For example, now this particular zone, over the past I don't know how long, but this is the daily time frame, right? So over the past long time, yes, over the past long time, because you can see that owing to the fact that this is the daily time frame, it means that we are talking about years now. Yeah, if you look down, you're going to see this is 2013, it's 2012, it's 2011, and so on. So over the past, in a long time, right, this particular level has not exactly had multiple rejections within a particular short time frame. Now if you take it back, you will see that this level has been holding up for years, right? Because remember, when a support is broken, it turns into a resistance. When a resistance is broken, it turns to a support. So during the periods of 2007, 2008, 2009, you can see that this level was a support level, right? It was a support level. Now you can see that it was broken. It was eventually broken. This was a false breakout. It was eventually broken in 2014, right? But before it was broken, you can see that we had about, is it 1, 2, 3, 4, I think over 4 times it was tested. So once a level has been tested multiple times, you can't tell when the next break, you can't tell whether the next retest is going to result in a breakout. So as this level has already been tested about 4 times, the next one led to a breakout. And then now, guess what? That level turned into a resistance. And now you can see that resistance now, it has been tested 1, it has been tested 2, it has been tested 3. So now, well, if we are lucky, the 4th test might lead to a rejection. If not, the 4th test might lead to a breakout. So that is the reason why you should be cautious when a level has been tested multiple times, okay? But if you have the level tested just 2 times, or maybe 3 times, Yes, for the fact that it has been tested 2 times and gotten rejected, it shows that that level is an important level. Okay, so if you catch a level on time that has been tested just 2 times, it's possible that the third time will still hold. It's not like it's guaranteed, okay, but it is just possible that the third time might still hold. Okay, so just pay attention to that. And then it's good to combine with market structure. Okay, supply and demand zones on higher time frames like the 4 hour or the daily. They give you a broader view of market strength and potential reversal. So the more confluences you add, the higher your probability of success in trading these zones. Okay, what do we mean by confluence? We've talked about confluence in a previous video. You might want to check that out. Confluence simply means when you have multiple indicators telling you the same thing, right? When you have buy signals from one indicator, another indicator, it could be 2 indicators actually. It doesn't necessarily need to be three or more. So long as you have at least 2 indicators telling you the same thing. When I say indicators, I don't necessarily mean moving averages, MACD, and all of that, right? It could be pure price action. For example, now you have a chart pattern like a double top, right? A double top is giving you a sell signal. This is an indication. This is an indication from a chart pattern, okay? And then maybe at the same time you have a breakout from a bullish trend line, and then this you got a sell signal around here because of this breakout, and at the same time that sell signal was followed by a bearish candlestick pattern. So basically, when you have multiple things telling you to sell, you have a confluence already. But you can actually add technical indicators as well for the purpose of confluence. Maybe you add a moving average, you add a MACD and all of that, okay, just to get additional confirmation. But what I'm just trying to say is that confluence is when multiple signals are telling you the same thing. Okay, doesn't exactly matter whether all your signals are price action based, or all your signals are indicators based, or it is a combination of both. Okay, but so long as the signals are different, they are given by different factors, right? So long as those signals are given by different what I call it parameters now. So long as the signals are different, so have different sources. Yes, so long as they have different sources. Maybe the first source could be a chart pattern, the second source could be a candlestick pattern, maybe the third source could just be a break of structure, yeah, maybe based on trend line. Yes, another source could be maybe based on horizontal support and resistance levels, and all of that, right? But when you have at least 2 or more telling you to buy or telling you to sell, then you have a confluence. Okay, so when you get confluence, it gives more validity to that signal. Okay, and supply and demand zones work better when it is aligned with the overall trend direction. Okay, now also check supply and demand zones on higher time frames. Very, very important. Okay, very, very important. That is a wrap, guys. Now you have a complete understanding of how supply and demand trading works, how to find these key zones and how to find them for better, how to use them for better trade setups. Okay, if you found this video helpful, make sure to hit that like button, subscribe to the channel for more powerful trading content, and also drop a comment below. Let me know if you have any questions or if there's another trading topic you want me to cover. See you in the next video.